Guide to Financial Markets and the Stock Exchange, How They Work. Hello, I'm Brian. Welcome to MoneyDrip, the YouTube channel dedicated to the guide to the financial market. Here, we will explore together the fascinating and complex world of financial markets and the stock exchange. We will discover what financial markets are and how they work, delving into different types of traded assets such as stocks, bonds, commodities, and more. We will delve into the heart of the stock exchange, understanding what makes it a unique place for investors and how it is possible to participate in its dynamics. We will also analyze the concept of transparency and supervision in the stock market, understanding how institutions and regulatory bodies work together to ensure a fair and safe environment for investors. We will not miss exploring market indices, key tools for evaluating global and sectoral economic performance. Furthermore, we will find out who financial intermediaries are and how they play a crucial role in helping investors achieve their financial goals. If you want to master the language of financial markets and gain a solid knowledge base to make informed decisions, I invite you to subscribe to our channel and follow our upcoming publications carefully. MoneyDrip will be your trusted guide in the financial world, where opportunities abound and knowledge flows abundantly. Subscribe now and let's start this exciting journey towards financial success together. Let's begin. Financial markets and the stock exchange. What are they? Financial markets represent the beating heart of the global economy, as they facilitate the exchange of various types of financial instruments such as stocks, bonds, commodities, currencies, and cryptocurrencies. The introduction emphasizes the central importance of financial markets in the global economy and how they serve as a fundamental hub for the exchange of financial instruments. Let's delve deeper into this point to better understand the crucial role of financial markets and the stock exchange within the economy. 1. The pulse of the global economy. Financial markets are an essential element of the global economy as they promote the efficient allocation of financial resources. They enable governments, companies, and individuals to acquire the capital needed to finance their activities. Additionally, they offer an environment where investors and savers can participate in economic activities and earn returns on their resources. Commodities include physical goods such as gold, oil, or wheat, and their prices can vary based on supply and demand dynamics. Currencies represent the money of different nations, and currency markets enable the exchange between them. Cryptocurrencies are a more recent phenomenon, representing digital coins based on blockchain technology. 3. Supply and demand. Financial markets are based on the principles of supply and demand. When investors want to buy a particular financial instrument, demand increases, driving up its price. Conversely, if there is a high availability of sellers compared to buyers, demand decreases, and the price falls. These price fluctuations form the basis for profit or loss opportunities for investors. 4. Role as economic stabilizers. Financial markets also play a crucial role as economic stabilizers. They respond to market forces, such as changes in interest rates or global economic conditions. These responses can influence investment decisions and economic policies both at the national and international levels. 5. Access to investment and economic growth. Financial markets offer investment opportunities and economic growth. Companies can access funding by issuing stocks and bonds, enabling them to expand, invest in new technologies, and create jobs. At the same time, investors can participate in this economic growth and benefit from corporate profits. In summary, financial markets and the stock exchange play an essential role in facilitating the exchange of financial instruments and are integral parts of the global economy. Their efficiency and functionality influence the flow of resources, value creation, and capital allocation, significantly impacting the lives of companies and individuals worldwide. What is the stock exchange? Imagine the stock exchange as a vast virtual marketplace where investors trade securities and financial assets. To understand what the stock exchange is, imagine being in a real marketplace, like an antique market, where different people exchange valuable items. Now, let's transfer this scenario to the financial world. The stock exchange, a virtual market. The stock exchange is like a large virtual market where investors come together to trade securities and financial assets. Securities can be company stocks, bonds issued by governments or companies, or other forms of financial instruments. Example with Alice. Buying stocks. Imagine Alice as an investor who has decided to buy stocks of a technology company. She believes that this company will be successful in the future, so she wants to own a part of it. To do this, Alice goes to the stock exchange, where she finds the stock of the technology company listed. Alice makes the purchase of the stocks through her financial intermediary, and the value of these stocks is deducted from her bank account. Now Alice is a shareholder of the technology company and owns a stake in it. She hopes that the value of these stocks will increase over time so she can sell them at a higher price than what she paid. Example with Bob. Selling stocks now. Let's imagine Bob as another investor who has already bought stocks of a company in the past. This time, Bob needs money for a personal project, so he decides to sell his stocks. Bob goes to the stock exchange and puts his stocks up for sale at the current market price. Another investor, let's call him Charlie, is interested in buying those stocks. Charlie agrees to Bob's selling price, and the transaction is executed. In exchange for his stocks, Bob receives the money in his bank account. Stock exchange trading. In summary, the stock exchange is a virtual place where investors can buy and sell securities, such as stocks, bonds, and other financial assets. These exchanges take place with the presence of financial intermediaries, such as banks or brokerage firms, which allow people like Alice and Bob to participate in the market. Just like in an antique market, stock prices can vary based on supply and demand. If a company is doing well and people are interested in buying its stocks, the price may rise. Conversely, if there is little demand for a company's stocks, the price may fall. In this way, the stock exchange facilitates the exchange of ownership and allows investors to participate in the success of companies or liquidate their holdings when needed. This buying and selling process is what makes the stock exchange a key element in the global economy and financial investment. Different types of assets traded in the stock market. Within the stock market, there are various types of assets being traded. Here's a more detailed description of the main types of assets traded on the stock exchange. 1. Stocks. Stocks represent ownership stakes in a company. Investors who purchase stocks become shareholders and gain voting rights and participation in the company's profits. Stocks can be common or preferred, with the latter often offering special rights such as priority in receiving dividends or capital repayment in case of liquidation. 2. Bonds. Bonds are financial instruments that represent a loan given by an investor to a public entity or company. In practice, the bond buyer lends money to the issuer in exchange for regular interest payments and the repayment of the principal at maturity. Bonds can be issued by governments, corporations, banks, and other institutions. 3. Commodities. Commodities represent physical goods traded on financial markets. These goods can include agricultural products such as wheat, corn, cotton, and sugar, as well as energy resources like oil, natural gas, and coal. Commodities are often traded through futures or options contracts, allowing investors to speculate on price movements without physically owning the underlying asset. 4. Currencies. Currencies are the exchange instruments used in different countries. In the foreign exchange market, also known as the Forex market, currencies are traded in pairs, such as EUR, USD, Euro, US dollar, or GBP, JPY, British pound, Japanese yen. Investors can speculate on exchange rate movements between different currencies to make profits. The currency market is the largest and most liquid financial market in the world. 5. ETF, Exchange Traded Fund. ETFs are investment funds traded like stocks on the exchange. ETFs offer investors the opportunity to participate in a broad portfolio of assets, such as stocks, bonds, or commodities, without having to buy each security individually. ETFs have become popular due to their diversification, liquidity, and transparency. These are just some of the main types of assets traded on the stock exchange. It's important to note that there are also other complex financial instruments, such as derivatives, including options, futures, and contracts for difference, CFDs, which allow investors to speculate on underlying assets without directly owning them. Transparency and supervision in the stock market. Imagine the stock market as a place where people buy and sell parts of companies, like pieces of a cake. To ensure that this place is safe for all investors, there are important rules to follow. The first rule is transparency, which is like an open window into the financial health of the companies. Companies that have parts for sale must provide clear and detailed information about their business performance. It's as if they have to show everyone a report on their finances so that investors can see what they are buying. But who ensures that these rules are followed? There is a kind of police for the stock market called the CONSOB, Commission Nazionale per la Società e la Borsa. This police constantly monitors the companies listed on the stock exchange to ensure they comply with the rules and provide accurate information. If something goes wrong, the consul intervenes to protect investors and ensure that everything is fair and safe. In essence, transparency and supervision act as guardians of the stock market, ensuring that everyone has access to clear information and that companies behave properly. This way, investors can make more informed decisions and feel more secure when buying parts of companies on the stock market. Market indices. Market indices are like representatives of the companies or economic sector they comprise. They offer an overview of the performance of a group of securities, providing an idea of how things are going for those companies or the specific sector they represent. There are several market indices, but let's take two of the most influential ones as examples. 1. NASDAQ. This is a famous American index, known primarily for including many technology sector companies. When the NASDAQ rises, it means that the stocks of technology companies listed on this exchange are performing well. Conversely, if the NASDAQ falls, it might indicate a challenging phase for the technology sector. 2. Sulfur Monophosphide 500. This index comprises the 500 largest companies listed on American stock exchanges, representing a wide range of sectors. Due to its broad scope, the SP 500 is considered a representative indicator of the overall performance of the U.S. economy. Each index is composed of a selected list of companies that reflect the specific sector or market it represents. The overall performance of these companies will influence the value of the index. Investors, analysts, and media monitor these indices as they provide crucial insights into the economic health of a country or a particular sector. In essence, market indices act as indicators or mirrors of the business world, offering an overview of the performance of the companies or economic sector they represent. Their fluctuations can provide vital information about the overall economy or specific sectors. Intermediaries. Who are they and what do they do? Intermediaries, such as banks and brokerage firms, play a crucial role in facilitating exchanges between issuers and investors. They act as bridges, enabling the transformation of savings into productive investments. Additionally, they gather information about the economy and the financial strength of the involved parties, facilitating the flow of capital. Risks, scams. How to protect yourself while financial markets offer earning opportunities. It's essential to understand and evaluate the risks. Avoiding scams and promises of easy profits is crucial to protect your investments. Conclusions. Understanding for better investing. Financial markets are fascinating and vital for the economy, but they require in-depth knowledge. Understanding the mechanisms of financial markets not only enables informed investments but also enhances understanding of the global economic system. Responsible investment approach. With the advent of technology, access to financial markets has become more straightforward, but the importance of knowledge and the responsible investment approach is greater than ever. Properly educating oneself and approaching financial markets responsibly can lead to maximizing benefits, but it requires adequate preparation. Thank you for following us on MoneyDrip, the channel dedicated to financial market guidance. We hope this journey into the world of markets and stock exchanges has been enlightening and stimulating for you, just as it has been for us. We aim to have provided you with a solid foundation of knowledge and tools to better understand how financial markets work and make informed decisions regarding investments. Always remember that the financial world is constantly evolving, and learning never ends. Keep exploring, studying, and staying informed to tackle challenges and seize opportunities that the markets offer. If you enjoyed our content, we invite you to share the channel with friends, family, and colleagues who could benefit from this financial guidance. Leave a like if you found our videos helpful, and leave a comment to let us know which topics you'd like us to delve into further in the future. Don't forget to enable notifications to stay up to date on our new publications and follow us on our social channels to interact with us and stay connected with the MoneyDrip community. Thank you again for being with us on this journey. Keep growing and prospering financially. Remember, financial success is within reach for everyone, and we are here to guide you toward achieving your goals. See you in the next video. And always remember, the financial world is an ocean of opportunities, and with the right knowledge and mindset, abundant wealth can flow into your life. See you soon on MoneyDrip.